All right, guys, here's what I call a 5 minute flash video, which just kind of summarizes the live open session, which got really long in the tooth. So just real brief, keep it short. Maybe this is wave four, maybe it's not. I'm really not concerned about that. What I was looking at is this where are we at with this impulse? Because this is impulsive to me. The way I counted this micro looks like could be a 1 2. Well, it depends how you count it, but I threw the 1 2 on there and put a pivot on there, which is derived from the 1 2, and that held. And then it came up, hit this fib 2618. So maybe that's five up. 1 2 3 4. Sorry, 1 2. Yeah, 3 4 5 right to the 2618. That would be a very respectable five way nano five up. The twos have been shallow and crude. It's been shallow since the December low. Things have measured on any time, almost every time scale, kind of weird, like not following standards. Usually a two is 382 to 50%, or maybe 618. This is nowhere near that. But I've seen this over and over again. It gives you a tiny pullback and it keeps going. Another tiny pullback. This one didn't even make the 236. So regardless of how you count it, I'm going to guess at two different counts. One is that this is 1 2 right here, and that's these purple fibs, and they project up to here, to 1 2 3 6 and the 1 6 1 8. So if that's a 1 2, then getting to here could be a wave three. Then the four would hold this pivot, and a wave five would come up there. But who cares? What I'm more interested in is if this is a 1 2, then this purple pivot should hold. It might hold. If this is a 1 2, that could hold. Now, if it's the green coming up a little further, and this is another 1 2, then this would be the pivot for that. And that should hold. So basically, this region for bulls should hold. Now, of course, I took a long anyway. It can totally stop me out, but let's take a look at that. So the way I got the entry on the strat is this is the opening candle right here on the 5 minute chart. Right, so I got Elliott wave in my mind saying, no, this is going higher just because of the way it looks and the way it measures and then where the pivot is. And we're just at the pivot. We went above the pivot now. So this region, this purple region, it coincides actually with strat and Elliott wave, which I love it when that happens because I had put a box around this last Thursday. So I think this purple region should hold. And I was saying I don't really like going long at the top of a range. I much prefer to go long at the bottom of a range, or coming up off the bottom of a range like this, like over here, like last Thursday. But I didn't do that. I wasn't able to do that. So, but I didn't want to buy like this candle. So I just come down to the 5 minute, let the inside candle print. And then I said, all right, even though this did make a low there, I wasn't believing it. Like I didn't want to be short. So I just said the next time it comes up, I'm going to put an order. And this is from the live video, a long order at the top of this candle. So that's what I did. And then as soon as that got filled, I was talking about how, it can come back. So typically you'd put the stop at the bottom of that candle. And then what I also do sometimes is take the preceding candle, especially if it's big, if it in the time scale you're talking about, if it's a sizable candle, which in this case it is on the 5 minute chart. This is a sizable 5 minute candle. Just find the 50% mark and put your stop 1 penny below there. So that's what I did. And that happened to come in at 106.96. So I always put my stop 1 penny below wherever the signal is, because it can come down and touch that to the penny, and then you get stopped, and then it goes where you thought it would go, and that's incredibly frustrating. So yeah, no, it's just 1 penny. But believe me, since I started using the strat, I've seen that so many times where it'll come back exactly to the penny, and then go. I don't want to get stopped at that, so I leave it 1 penny below there. So anyway, that's it. That's my stop. That's my long entry. I'm risking 40 cents to try to take a shot at getting, like, if it makes it to this target, that would be just call it roughly $4.50. So I'm risking 50 cents roughly to make roughly $4.50. So what's that? 9 to 1. So, if that holds, 9 to 1 R&R is fairly, I'll take that. But it's really just more about the structure here I like. And this looks impulsive. And I use strat to dial in the entry here. So we'll see. We'll see if it holds. If I get stopped, fine. In the morning, I'll see where it's at because, my thinking is that even if I get stopped, now, of course, I can get stopped and then I'm asleep because I'm not going to stay up looking at this thing. Stops are in, emotions are out. Thank you, Ricky, for that. And but if I wake up in the morning, if I had gotten stopped and I wake up in the morning and it's coming down into the bottom of this range and is sort of consolidating, hanging out in there, I'll come down to the 5-minute strat and take another shot. If it could also hold this area. I think bulls are good as long as it's above 104.92. I think the bullish scenario is good. Personally, my hope is that it doesn't stop me out, of course, and that it's already doing enough of this sort of sideways consolidation. But look, it's making higher lows, right? It's making higher lows. So that's cool. And I do like this 3 here. I mean, it's only a 5-minute candle, but I'll even talk about it on the 15. You had a 3, which is really, I view that as a stop out candle. It's just trying to stop out longs. It's a range expansion candle. That's what it's doing. But then, these next couple of 15-minute candles are trying to hold this range, which was derived from this inside candle on the 5-minute. So, this step 1 is hold this range, which my stop is just below that, by design. So that's what I got. Who knows? Okay, guys, good luck. See ya.